Hello everyone, this is Teddy Keckstead from Forex Trading Unlocked, and we are here today on February the 26th, 2020 for a daily Forex market analysis and live trading webinar for you. And before we get into it, we want to just show you our disclaimer to remind you that this webinar is for illustrative purposes only, nothing more than that. And now we will go to our live action scene where we have our www.forex-trading-unlocked.com website pulled up. And we already clicked on the workstation page here at the top of our website to pull up that page. We're going to hide the social media things, but remember, anytime you're on our website, please share the pages on Twitter and Pinterest and stuff. We do have some numbers that are coming, oil numbers that are coming out at 9:30 today, which is right in front of our show on TFNN. You can always catch Forex Trading Unlocked at Tiger TV on TFNN.com every Wednesday at 9:40 a.m. Central Standard Time, so that's 10:40 on East Coast time, which is what they're on. And we are always right after that 9:30 oil number, which gives us a nice little mover sometimes for the currencies. As you can see, the numbers for the outside of that are pretty much done for the day. We're going to go to our chart now and show you how the dollar index is faring. Now, as of yesterday, we've continued to hit the dollar index for the first time in quite some time, actually, and we are close to our downside target zone. So the question is, will this break continue to manifest the bearish momentum to get down into that target zone, or will the dollar rebound quickly because of the coronavirus? Now, I think the trend has been overdone by the coronavirus. We know that there's going to be impacts in the governments as well as in the geoeconomic dynamics of the world for the next few months to a year. We'll see how these all pans out, but we know we don't want to get too panicky. The markets are always forward thinking, and they right now are correcting in a big way. We'll see how this continues to manifest over the next couple of weeks, but we don't want to get too crazy too quickly as far as what's going on. Remember, the stock market's coming off of all-time highs and is overheated to begin with, could use a correction. This may be just what is needed, so at least in the short run. So our downside target area is right here at 98.62 down to 98.32 in this support band. Not that far to go, but yet with the dollar strength the way it's been, it's really rough to get down there, at least apparently for a correction. As you see this correction that we had here, we've already had that pretty much already here. There's a symmetry going on here that's pretty even. So if we find support here from yesterday's trading, it's not unlikely that that could be the higher move low for this upward trend. So let's go look at the Euro US dollar, where we have some trades on right now. Now, we had a buy signal, a bullish engulfing line that came out a few sessions back, and right now we are headed towards the upside target zone. If you look at the euro, it's almost like an inverse reflection of the dollar index. Of course, the euro, remember, is the biggest weight in the dollar index. May have something to do with that. Not that they always look alike, but right now they definitely do. So it's interesting to see if the euro, if it can continue to gain strength here, especially right now. The U.S. markets have not opened yet. The market did make a higher move high so far on an intraday level and on a daily basis. Now it's currently lower on the trading session for the day, but then we're right in front of the U.S. market opening. We know that the stock market has been selling off quite significantly over the past couple sessions, and there's now a lot of talks about globally interest rate cuts coming in because of the coronavirus, and we'll see how much of that fundamental blah 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 actually comes. We don't know if that's really going to be necessary yet, but we'll see what happens. So right now we have a trade going on. Right now, as you can see, we'll pull up our live account here. We have our account number pulled up or covered up, but as you can see, this is a live thing. Right now we have one US dollar Swiss short, and we have one euro US dollar long going on. This is on a MetaTrader platform. So for those of you familiar with MetaTrader, you're used to seeing this sort of scheme here. So we have a long that we've been in for the euro US dollar for a couple sessions now. We have our stop at 108 even, and then we have for the US dollar Swiss, we have a stop at 98.15. So as you can see here, the market's slightly lower. Both of these are slightly in the lead. Actually, the euro is actually pretty much a scratch or wash right now. So we have that also in the normal forex.com account. We have a euro, and then we also have positions on in the Nadex. This is also a live account. So these are options that we're going to look at these trades. As you can see, the euro US dollar, we have the greater than 109 quarter strike price. This expires on Friday. As you can see, we have 2 days left. There's the expiration to February 28th. You can see when we initiated the trade on 2/24. So these were not done today. These were done 2 days ago. We've been in these trades. So now we're going to see how they continue to manifest, whether they are still something to hang on to or if we should bail on them. We'll see. Right now they're only slightly down, and it's pretty much just the edge of getting in and out of these options because the market hasn't moved so significantly yet. All right, so back to the euro US dollar. So we had, what was that? 109 quarter is our, let's refer to this. Yes, $1.09 quarter is our euro binary option. So we're going to put in a horizontal line for those of you that are paying attention to this binary option trade. So we'll go to coordinates 109.25. Okay, so that would be that. And then we'll change the color, make it a little bit more obvious for you. There we go. Okay. So we have this dashed line here. This would be our binary strike price. So as you can see, the nice thing is it's right below our target zone. So how fast can we get up to that area? Well, we already know that the higher move high today came just short of it at 109.09. So if we reverse gears and can get back up and have another positive close today up towards these highs or even higher than that, then sometime between Thursday and Friday, it's very likely that we could probe into this 109.36 to 109.72 target zone, at which point you would have the ability to either get out of the option a little bit ahead of time, which it would be at a profit also at that point, or you could wait till Friday's expiration and get the full value of the trade, but that's only if the market settles above 109 quarter. So you may want to, since this 109.36 is our target area, 109 quarter is our strike price. Once we get in here, there's no reason to say that the market may not reverse gears and start to correct its way back down. Remember, this market is in a bearish trend. This is a bullish corrective move right now that we're looking at. It's a short term. We have no confirmation of true bullish strength in the euro US dollar. So there's more things leaning. It's technically oversold, but fundamentally it's very, very bearish. So use caution as we approach this upper target zone. So if you're on the outright futures or the outright FX market, then right now your risk level would be this prior low, swing low back here from a few sessions back. You obviously adjust accordingly for the front month futures. Since it's already the end of February, we're heading into rollover. You're probably still trading the March contract. So if you're already in this trade, you would ride out the March contract into this target zone because you're only going to have it on for another few days or so, maybe a week or tops. So you would be getting out in front of the rollover. If you have not gotten into this trade and you're looking to use this as another buying opportunity, because if you look at it, we're just above the entry price anyhow for the futures and the FX position, then that's a different story. So for the FX position, you would still use this past low here at $107.76. For the futures, you would obviously adjust for this the spread difference between the two, the futures and the FX cash, and look for this target zone to be pretty much the exhaustive part of this rally. Now, does it mean that this market could not become a bull and go up to 110.96 by next week? Absolutely, it could happen, but most likely not, just because of the fundamentals. So right now we're managing a long trade on the futures, which we don't have that account pulled up because we don't want to show the account number on that one. But for these, you can see we have it in two small accounts. This is to show our retail traders and that we teach lessons to, that we use active live money to do this, to show how you can start with low accounts as long as you manage your money properly. And this is how you do it, to show you how to start with this so you know what you're doing when it comes to your bigger positions. So anyhow, that being said, we're following the long position for the euro US dollar. We have our binary strike price. We'll come back and look at this and see how this is working once we have the U.S. Open. As you can see, it's 8:22 Chicago time. We have 8 more minutes before the U.S. stock market opens, and then we will see what is going on with that trade. So right now, our first trade that we've looked at for today is the long euro U.S. dollar. It's a counter trend trade right now that has been in place for a couple days, and we will see how it's working in some of our other markets. So British pound U.S. dollar. This is one that we were calling for sideways going into the Brexit move at January 31st, and then it still continues to be just a little bit of a bear, but not much, and just pretty much a sideways chop. Range traders have been killing it for the past 2 months, 3 months, especially the last month of February, which I never saw this one coming. Especially we started off with this nice slide. It looked like we were going to get a new swing low, and then we remember we said we might have a lot of support here because of the fact that this market has been going sideways for months now. Now the coronavirus hasn't seemed to impact the British pound US dollar the way it has weighed on many other currencies. The pound obviously has been, even in the midst of a strong dollar for months, the pound has been rather resilient. So we are still looking at this is a range trader's feast here, only a breakout of a $1.30.70 up here, or a breakdown below a $1.28.45 at this level gives us any indication of direction. Now we have been making lower move lows and lower move highs, so the trend is fundamentally and technically a bear. But how bearish? Well, that's the thing, is every time we make a new low, we don't make it by very much. So, and then we recoil pretty decently. And even when we have a down day or an up day, it's even we're just canceling yesterday's trade. Now today we are an inside day. This is a big thing. If we don't take out new low, make lower move lows, or come back and make higher move highs on the day for the British pound, that means this thing is starting to consolidate even more. So the range traders are capitalizing huge, selling into slightly newer move highs or just below highs, or buying into lows, because it hasn't been much risk one way or another. Swing traders have just been getting chopped up. So especially if we, as you can see, the lows here, if this is contained, and especially if we close right where it's at right now or slightly higher, you're going to have an inside day with obviously a lower close, but not significant enough to trigger us to be super bearish, meaning newer move lows. However, the high that we made yesterday, if this is a lower move high and the way we are going today, then directionally and fundamentally with this trend right now, we're looking at a test of this $1.28.45. Now, any failure from here, now the dollar has been strong, but it hasn't been that strong versus the pound. Any failure from here definitely confirms weakness, because what do we have here? We have major support that's been holding up this market for some time at $1.2762. So this is not a binary level like we marked in the euro US dollar, so we'll change the color of this just so it makes it a little bit more obvious. But this is definitely a big support threshold. So any failure from here at $1.28.45 has us targeting new move lows down to $1.2762, which is major support, holding up this uptrend that has been intact for basically since the beginning of the fall. So very interesting for the British pound. This is a contract with wide spreads, getting in and out, and when it starts to cook and swing around, it really does move. So when you catch a ride on the pound, it's pretty fun, and if you're on the right side, that is. If you're on the wrong side, it hurts, that's for sure. So this market moves fast, and it's winding its coil, so I'd be very cautious being a directional trader. If you're a bear, I think you have selling into rallies is a good, obviously has been working so far. That is the trend. If you're a bull, I would use really a lot of caution, and definitely do not be long below $1.28.45. It's going to be really hard to sustain that. Now this could be where we just probe below here and bounce in between these two major pivots, and then we could get a big rally that pulls us back into this range. It's not going to necessarily make us bullish. This market could be chopping sideways like this has been going on for months. It's been going on since let's see, the end of October, and now we here are at the end of March. We could be saying at the end of July, boy, this thing has just been chopping sideways, going nowhere. So the fundamentals and technicals are grappling, really struggling with direction, and with the pound US dollar as bullish as it tried to be, and with the Brexit move and the that is now in full motion, it still doesn't seem to help with getting any true trend. So we'll be monitoring this as we do every day. And remember, the dollar index, don't use that as a guide for the pound US dollar right now. It seems to be a little bit more free floating. So now US dollar CHF, this is where we have another signal. Remember the euro US dollar, we had that bullish engulfing line. Well, now we have a counter trade that goes along with the same direct euro as far as going against the dollar. We had a bearish engulfing line sell signal occur also the other day in the US dollar Swiss. Now this today had probed into our downside target zone of 97.32 down to 97.03. Does that mean that this break is completed? Absolutely not. But it did hit its target. So for this sell-off right now, it is already at the minimal target as far as taking profits on on the trade. The extended target is 97.03, so somewhere in here would be, if you were still short, you would be looking to still get out of this trade. Does it mean that it's not going to continue lower and get down to this 96.24 pivot? Absolutely not. This could be this could be the beginning of a correction in the dollar that's going on right now. So dollar strength may be coming to an end. Coronavirus fears, although they have escalated and driven the markets, the markets may be overdone for coronavirus fears. Remember, it's a flu. This is not some kind of new black plague that's going on. So people have sensationalized it, and it definitely has an impact on what's going on globally. However, it is not the Black Plague. It is a flu. So, and even though the totals seem alarming and whatever, if you look on the population basis and whatever, it's not that extreme, well, yet, and hopefully it will not be, and hopefully things are being contained, and the whole world is now on top of it, hopefully, and things will, and also as the warmer weather comes up in summertime, things should also subside as far as the flu and for this virus and the spreading of it. But the numbers definitely are significant, and the markets are always forward thinking, so we will see how they continue to react. So for this target here, remember, our sell signal worked for here. Now the bullish signal in the euro US dollar has not reached its target yet, so there may still be room. So we'll be following the Swiss. If this continues to hammer support and come back down towards this target zone, you can rest assured that there's a really good chance that the euro US dollar trade is also heading towards its target zone. It may not reach its target zone, but if this continues to lay back on support, that would lay credence to a weaker dollar in the European versus the European currencies as a whole. So we'll see how this trade is manifesting. As you can see that their euro US dollar trade, we have the option here. We did not put one on in the Swiss. However, we do have one in the remember, in the outright Forex contract, where we're short at 97.64 with a 98.15 stop. We're looking for this trade to pretty much continue. We're looking for a bigger correction now, so we're working this trade. Since we've just touched the top of our target zone after today's close, we will lower our stop and start to work this, because we've already hit, like I said, the beginning of the target zone for the Swiss, but not for the euro. We're not moving that one at all. So now let's go and jump to our US dollar JPY, because we have one of those options on. Now we've had a nice sell-off off of higher new highs. Look at how this market exploded last week and now has come back over the past few sessions. Today it seems like the market is gaining ground again. So we're going to key off of these last pivot swing high and swing lows as our pivots for upside and downside momentum. We found support in an area where there's been a lot of resistance that now has obviously become support. It seems like this bull, no matter what, is getting more and more volatile and starting to swing. But no matter what, this market has been in a bull market. Even when the dollar was correcting lower versus all the currencies, this market, it was a raging bull. So now even in dollar strength and dollar weakness, we're going to consider this market remaining a bullish trend no matter what, as long as we continue to make higher move highs like we have here and higher move lows like we did yesterday. Today's turn of events, if we continue to trade higher for the next couple sessions, we'll confirm our higher move low here. And then what does that dictate? Higher move highs, higher move lows, confirmation of trend, and we will be looking for a rally back up towards this 112, 222 level. Remember, we were looking for a 112 to 112 half as our upside target. We thought it was going to take another couple weeks for it to inch its way up there. It exploded, popped up into that area, and now is corrected off of it. And now we're looking for another run back to challenge it. 113 is obviously our longer term target that we weren't even looking for until maybe April or May, because this has been a grinding rally. But with this volatility that we have here, it's not unlikely to see us swing high and get a breakout that if we take out this 112.22, it's very likely we're going to blow through 112 half and be really close to 113 in no time. There's a lot of swinging around in the gold markets and the oil markets. So as these markets continue to heat up and as oil continues to drop and certain other things are going on with the markets, it will be, oh, we have to correct this thing here. I'm sorry. As we're looking at this, we definitely want to remind you, by the way, to please subscribe to our YouTube channel, which is at www.youtube.com/Forex Trading Unlocked. And you can always find us on YouTube there and see past videos and lessons. So don't forget to do that. Sorry, I had to edit that. So anyhow, once again, we have our pivots here that we are trading in between. We do have here a US dollar 111.75 strike price option that expires on Friday that we've been into for the past couple days. As you can see, it's slightly lower right now. So our strike price once again is 111.75. Let's put this into perspective for you. So 111.75 would be right up here. Let's get this coordinate correct. There we go. Now you can see what we're talking about. So a rally back up here, I mean, look at it. It took only two sessions to come all the way down to where it's trading at right now. So another 1, 2 by Friday. Is it possible to get up there? Absolutely. We're probably going to get out of this option sometime tomorrow or early on Friday, depending on if we do get a corrective move up there, because the likelihood of settling above here, I mean, it could very easily happen on Friday, but we probably like to take a profit and scratch this trade as quickly as possible if we can, because we've been in for 2 days and we didn't. This volatility is super crazy in this market right now. So as the week is winding down, remember, you buy time when it comes to options like this, so we want to use that to our favor. So if we can work this and get it positive over the next couple sessions, we'll most likely, unless we really see a bullish move manifesting that would dictate us looking for it to go up above 112, make a breakout here by Friday, then we would leave it, because especially if we do get I mean, if today the market's just open in the U.S., if we end up settling above yesterday's opening price here, like especially if we can get up towards 111 even or even higher, if we were to settle up in this area today and then get follow through tomorrow, then we most likely would hang on to this trade and let it go till expiration on Friday or close to it, and see if the trade would manifest, because then we'd have a very good chance of settling above the strike price. Remember, you have to settle above it if to maintain your profit in the option, if you are to make money on the trade. Otherwise, if you have the ability to get out with a profit beforehand, take the money and run. Remember, pigs get fat and hogs get slaughtered, so you don't want to get slaughtered out there. So we have that market swinging in Asia. Now let's look at the Australian dollar, US dollar. Now this one, I'll tell you what, we've been saying for weeks, if you're a bull, use caution and definitely don't risk more than the lows, because as you can see, almost every single day we make new or move lows. And today, dollar's kind of mixed. Australian dollar, I don't think there's anything mixed about this trade. We have this pivot point here at 67.51. If we get back up to here, I think the only way that happens is if we have a tremendous dollar sell-off and some sort of reason to think that Australia is going to have some sort of reprieve and boom somehow, because right now they just have so many fundamentals that are hurting them, and the Australian dollar, US dollar trade is most likely going to continue to trend lower for the next few months at the very least. So it's really hard for us to be any type of a buyer here. Right now, selling options, selling credit spreads above the market, and getting short on selling into rallies is a good idea, I think, for this market. You continue to make lower move lows, lower move highs, and momentum, no matter what, just doesn't seem to fare whatsoever on the side of the Australian dollar, US dollar. Now, if we do start to see some interest rate swings and things like that, there may be reasons to see where we can get some nice corrective swings in the Australian dollar, US dollar. But in the midst of wildfires, coronavirus, and all kinds of other things going on with Australia, I think that we have to just maintain a bearish posture until we really start to see a light at the end of the tunnel. Now we'll look at the New Zealand dollar, US dollar, which is in the same trade zone. And if you remember, this market as well has been sliding against the dollar. Not fundamentally as harsh as the Australian dollar, US dollar, but the New Zealand dollar, US dollar is becoming a bit of a roaring bear. And with any luck, it's going to pull up here. What is going on here with the chart? There we go. New Zealand dollar, US dollar. As you can see, it made a lower move low just like the Australian dollar. It's been trying to bottom for 4 days, but to no avail. So this one is also under pressure. It doesn't have quite the problems. It doesn't have the wildfires, but it does have coronavirus and a slowdown in its economy as well. And because of that region of the world being under such pressure, it's definitely going to have an impact on their economy as well. So are we looking for a bounce here? We are definitely looking for a corrective move, but are we looking for a bullish move to be sustained? Probably not. We're looking more for a sell rally forecast and trying to catch a falling knife. Right now, we continue to make lower move lows, lower move highs, even on an intraday basis, on a tight basis. We had made these newer move lows a couple days ago, made a lower move high yesterday. We've come back today and made lower move lows. So we still right now are a bear. You can always keep trying to buy into the bottom, but on this one, I think you're just going to get slaughtered. So range traders have a potential to buy into lows and get out with a profit. But if you're just buying and trying to get long, I think you're working a really bad position right now. Wait for a true signal. Now let's look at something that has been a trade that we've been talking about now for days, especially with caution, like about a market that continues to make new highs. The U.S. dollar, Turkish lira is a very, very aggressive bull. And with the swing trading opportunities, you can see yesterday, this is our pivot here at $6.6069. Trading above this keeps us an aggressive bull. You can see it's making new move highs as we're talking right now. This market has a wide spread, so unless you really are an experienced trader or have a real reason to be hedging the U.S. dollar versus the Turkish lira, I would be very cautious of trading this market right now. For sure, to the downside, there are opportunities for swings, and when it goes, like you can see over this past 2 days, the volatility it's had, if you can catch any type of extreme slide like that, then I would say that would be a good thing for in a buy dip scenario situation, which I think this market is going to remain for a while. This is a bull, but like I said, the swings are large, so you got to have deep pockets and have a good grasp of what's going on here. You really have to pay attention to this one. But if you can get another correction here that would come back, let's see, from 616 back down towards just above this pivot somewhere here, that would be a nice buying opportunity. Remember, though, getting in and out of this trade, you have a wide spread, so you're already giving up a big edge just getting in and out. So you really need to catch a big portion of a trend just to be profitable. So remember those numbers. So if you're believing that this trend is going to be maintaining itself for quite some time, and it has been a bull for a long time, we are pressing new move highs. And it doesn't look like it wants to stop making new move highs. So, but the swings are going to be very strong. Use caution. The potential for a really good move to continue here is definitely in place. Remember, with the Middle East and the corona outbreak spreading throughout the Middle East, Iran, Iraq, now into Pakistan, Turkey is caught in the middle. So what is going to happen to them? We don't know. Look at what's going on in Italy. So this is why I think this trade is exploding the way it is. Now, if things get contained, be careful, because then we could have a monstrous sell-off, and when it happens here, you can see when it gets volatile, it moves fast, so be very careful. Remember the spreads and how if you're, like I said, a veteran FX trader and you have really good money management and principles and a strategy here that works, or nothing works forever, but that works well, then I would say this is a good opportunity here. We've been looking at it, and it's been too tight. We're looking for another correction like this. We get something like this with a basing opportunity. That's when I think we'll take another shot. A look at that, especially if we have a valid buy signal somewhere. All right, now let's look at the U.S. dollar Mexican peso. This is another market that the U.S. dollar has gained on very, very drastically over the past few sessions after having been a bear. So if there's one market that has been running the dollar into the ground, it has been the U.S. dollar Mexican peso. As you can see, though, the last few sessions, wow, look at that blast off here. This just incredible correction here. Could have already set its short-term lower move high. Like, remember, even though this is making higher move highs on the short-term basis, on a long-term trend basis, we set this low a few weeks ago, and now here this high from 2 sessions ago could be the corrective high. If you look at here, swing low, swing high. Here we have swing low, swing high. This is more extreme than these here. So the overall trend is bearish. So right now we're heading into spring break. Maybe we get a little float here for a little while for the next month or so. Chop sideways, but I would look for selling opportunities here. I would be very leery of maintaining this strength. Now, if the coronavirus truly does become an issue down in South America and Mexico, well, then that's a different story. Then I think this may be the beginning of a big reversal. So maybe that's what this is. We have a lot of big money that's banking on the fact that the U.S. dollar versus the peso also may return to higher levels now because of the coronavirus. And we'll see how the tourism and trade are affected over the next few months. And also remember, we have spring break going on too, coming in, where usually you have a lot of U.S. college kids and families going down to Mexico. Let's see if they start to restrict their travel plans. U.S. dollar, Canadian dollar. Here we go. Let's see what's going on here. All right, U.S. dollar, Canadian dollar. We have a failure here from $1.32 even, or a rally above $1.30 through 3.28. That will dictate our direction. Right now, we had set a longer-term higher move low after coming off a higher move high. So we are bullish. We are looking for a challenge of this $1.3328 area. So as you can see, we have a $1.3375 strike price option here on the Nadex. So let's see, $1.3375. So that's above our little arrow up here. So that's where we're looking for a breach of this resistance area here over the next few sessions. That should make that strike price profitable. In that case, we would get out of that ahead of time. Do we see it rallying up to that price? Well, if we have a reversal of fortune today, right now the market's making lows, so it doesn't look like it wants to do that. But remember, we're coming off a higher move low. We just set what is right now short term a lower move high, but that's only if we're becoming a bear. If this market is continuing this trend, then this is just setting a high, and now we're going to set a higher move low before we get our breakout. So the timing, we may not have enough time for this trade to manifest to get the Canadian dollar up to that strike price, but it's very likely that over the next couple of sessions we could get a challenge of $1.3328 and get it close and get out of that trade with a nice positive result before we're done. Remember, we had a nice move on Monday. Yesterday we were chopping around. Today, right now, with it being negative like this, after having probed a higher move high, it's looking pretty bad for us on today's session. But who knows? The stock market just opened. For all we know, shabam, this market's going to blast off and just have a big breakout to the upside over the course of the next two sessions. So we'll be monitoring this trade. So right now, this one is a little bit rough. Now let's go back to our Euro-US dollar trade and see how things are going since the market has opened now. And since we've been going through this analysis, looking at our trades, so right now we came short of our target distance and also our strike price for our option trade. And right now the market is hanging on the lows. So right now the Euro-US dollar is not doing so well. Dollar strength, since the stock market has opened, is starting to weigh on this currency right now, but then also the market just opened, so it's digesting yesterday, and we'll see how things go. Remember, the first half an hour to, or 15 minutes to a half an hour is a lot of noise in the stock market. For all we know, the stock market 2 hours from now could be 700-800 points higher, or it can be 1,000 points lower. So we just want to see how it absorbs over the next hour and a half, and then we'll have a better insight into where direction really is going. So if you're already in your trade, you know, we're riding this bull right now as it stands. We haven't hit the target zone like we did with the Swiss. Today with the Swiss, we'll be adjusting after the close. With this one, we have to ride it out right now until it gets either up to the target zone or it comes back to cancel us out. So we'll see right now. Right now, we're just above our entry price, and we'll see what goes on. So we have this trade manifesting, and we have the long Euro US dollar trade, we have the short US dollar Swiss trade, we have the long US dollar Canada trade, and we have the long US dollar Japanese yen trade. So we're short the dollar, long the dollar, playing both sides. We have divergence of currencies, and we shall see how things manifest over the course of the day. So remember to subscribe to our YouTube channel at youtube.com/Forex Trading Unlocked, or always check us out at our website up here, www.forex-trading-unlocked.com. And I want to thank you for your time today. Please like, follow, and share if you would. And with that, have a good trading day. Thank you very much.